All right, welcome everyone. So they have a pretty good lineup here this week dealing with trading psychology. And what we're going to talk about today is the growth mindset and how a professional trader can use that mindset to improve their skills. So this is a presentation I've given a couple of times. It's a newer one, but it's something that I work on a lot with the individual traders that I work with. I started trading in the mid 1990s full time, starting out in the stock market, but I've really, since then ventured into many different markets. And currently, I primarily trade futures, index futures, oil, and gold as well. And, a handful of other things also. What we're going to look at, though, is when we talk about the growth mindset, this is really a mindset that affects all aspects of your life. How many have heard that term before? Growth mindset. How many are familiar with that? Nobody's popped up a hand yet. Jay is. Well, Jay, you do, of course. So what is the growth mindset, you guys? The term growth mindset, it went mainstream around like 2006 with the publication of Carol Dweck's book, Mindset, the New Psychology of Success. Now, for those of you that have read my trading discipline book, it was put out around that same time. You'll notice there's a lot of overlap with different traders when they talk about the mindset of a trader and discipline of a trader. But I really love her term or her key phrase that she uses. So what we have with the growth mindset is it's a mindset where if you believe that your talents and abilities can be developed and improved through focused effort, education, persistence, and here's the biggie, a willingness to accept criticism as an opportunity for growth, then you have what Dweck would call a growth mindset. So it's basically if you have some of your favorite teachers, think about who were your favorite teachers that you had growing up? Who inspired you to want to learn more about a topic versus those that you just couldn't wait to get out of the class and you're like, oh, I have no use for this. I just want to be out of here. I'm not learning well. Well, if you go in and you have a teacher that really focuses on the growth mindset, they tend to inspire their students. They engage them. They help them look at problems from different viewpoints. It's not just, hey, here's how I do something and every other way is wrong or not as good as my way. When you look at trading, there's a lot of different styles and strategies out there across the board. Some people trade specific securities that they love, and they might have like specific patterns that are their favorites that they come back to time and time again. And that's like their core for how they trade. But you also have traders that just say, oh, that's stupid, that hey, this is the only way that you can do things. Anything else is not going to work. Well, you know what? If you come across traders that have been trading for over 20 years, and David has a lot of those here in his panel list over the course of the week, none of us are exactly the same. We all have like different things that we gravitate towards. But the thing that helps us stick around is that when we do experience setbacks or we do run into a problem that is really difficult, we work around them. We come back. We don't say, hey, you know what? This just doesn't work. I don't care why it doesn't work. It just doesn't work. So I'm going to move on. So maybe, for example, one particular strategy, you might see like someone like me teach you, for example, and you just can't seem to apply it in real time. Well, it's not necessarily the pattern per se. It could be just that you don't understand it as fully as the person who's teaching it. You don't have as many examples to see the nuances of the differences as the trader who is teaching you the strategy. Or it could be that you're hesitating too long before you're actually taking the trade. So you're missing the key do or die points, and you wait long enough, well, a good chunk of the move could already be underway. So I've had situations where, I'll be calling trades during the day, and they'll be really short-term trades, day trades. And you'll run into traders that struggle to make the same type of gains that the trader they are following is making and posting. And a lot of times that just comes down to a lack of confidence in the strategy, meaning they haven't studied it enough to the point where they're comfortable executing at the trigger points or exiting at the trigger points, maybe not holding long enough and bailing too soon. So these are common things that traders run into, not just, when they're following someone else's strategy or learning to trade from them, but also when they're studying their own strategies. And what we do with the growth mindset is we look at techniques that we can use to overcome those hurdles, to build that confidence, and always keep an open mind that there's always something more you can learn. You can learn greater nuances in price development. You can learn more strategies. You can branch out into different markets. So it's never saying like, here is do or die. I mean, I've been trading for about 25 years now. And when I look back at how I traded even 10 years ago, there's a huge difference because of continuing to study and continuing to want to learn more about what the market is doing and how it reacts to different stimuli. So if we look at a fixed mindset, then you're finding yourself thinking, you're just not smart enough. You're never going to be able to succeed at the endeavor. So how many of you have like beat yourself up over a bad trade or a bad day or a bad week in trading? I have, over and over again. It's not something where everybody has either a fixed mindset or a growth mindset. We tend to go in phases, and we can build up our confidence, but a bad trade can really rip you down again, especially if you've taken a series of them in a row. And what we're going to talk about today are different ways that we can rebuild that confidence and still keep that desire to learn more and do better and constantly improve, and realize, hey, there's no end game here. We might have goals that we set for, the immediate future or like a year down the road, but there's no finished point, you know? So if you're stuck in one category or the other, what can you do? You're thinking, hey, I can never truly be as good as somebody else. You know what? Talk to some of my traders. They have entry points sometimes that are even better than mine. It's so fascinating to see how different traders approach the market, and how even if you learn somebody's strategy, like my system for market analysis, for example, that they can go and take those trades and use it within the context of their own personality and their own trading style. So if we look at something like talent versus mindset, a lot of people say, hey, you have the talent to trade the markets. That's something that I can't get that talent. I'm not born with it. It's something that you either have or you don't. Well, that's not true. Everyone can improve. Everyone can do better. Sure, some people have greater psychological hurdles that they need to overcome. If you're coming from a point where you don't have a lot of extra income to put towards education, to put in the time toward developing the strategies and building confidence in the strategy in a sim trading setting, then it's much more difficult to continue to progress because you have that overall added stress that is more difficult to overcome. The great thing about the market these days, though, is that There is the ability to open sim trading accounts where you can practice on them for however much time you want to put in a week. You can take your time. It doesn't have to be something where I need to become a successful trader in 3 months or 6 months. It's going to take a couple of years to get to a level where you really start to feel confident in the things you're seeing as they're unfolding. And even after that point, you'll have setbacks. I mean, look at any professional sports athlete. There's always going to be setbacks. And the one thing that struck me was Simone Biles at the Olympics, how she pulled out because her mindset was not in the place it needed to be for her to succeed or for her to feel like she could succeed. And she started to be able to, over time, recognize, hey, listening to that inner voice where something's off today. I don't feel like I'm at the level that I need to be at today. And in trading, if we try to push through that by trading live, then it's a great way to blow up your account. So if you come into the day and everything just looks kind of messy to you, it's really important to have the confidence to say, you know what, I'm not trading today. I might sit here and take some sim trades, or I'm going to go and study my trading journal or previous trades that I've had, especially focusing upon those that were really big winners, as well as those where you made some huge mistakes. And take that time to analyze that. When I came into the market here today, I came in a little bit late. I'm like, you know what? I don't really see anything. Nothing is speaking to me here. We had some great action a couple of days ago that triggered some nice strategies, and the market's continuing to move with those strategies. But at this level, it's just not high probability. And I'll actually cover what's happening in the overall market here in a little bit later in the presentation. So you can see how we can apply different aspects of technical analysis with our growth mindset. So this image here, I've used this a lot in my classes because I was trained as an artist growing up. And my son is really, really focused on it as well right now. And when you look at the image on the left, pretty much every artist out there starts out at levels like that, where, hey, well, I mean, even if you look at my son's pictures, when he was like 4, you've got a head on a stick, but it expands from there. You've got the ability to put greater detail and improvement. The image on the left might be somebody's basic idea of a bull flag. You can see, hey, bull flag, sure, the pattern's there. But when you look at it on the right, you can see a lot more detail. And traders that work on the growth mindset aim for the image on the right, where they understand the nuances and details that go into a strategy. It's not, hey, this is just simply a pullback in an uptrend. That's not enough to be successful with trading bull flags. You have to understand the trend placement, the momentum, the time development, which we're actually going to talk about more here later on. How does volume play a role? How do different support and resistance levels work together? I don't rely on many indicators in my trading. In fact, the only indicators I use anymore have to deal with Fibonacci, and a lot of them, just from looking at them so often over the years, I don't even need to draw on my charts anymore because I know where they're going to fall. But it's that pure understanding that you're aiming for. Because if you rely on indicators solely for your trigger points and exit points, the problem you have is that as the market shifts, like our previous presenter, postulated that, hey, we're going to good chance of going into a bear market. And I don't agree with him. I mean, I don't disagree with him. I think that we've got a good chance of the overall market wanting to correct a lot over the next couple of years. Does that necessarily mean it's going to be a full-on crash? No, not necessarily, but it is going into corrective mode, and we've already started to see that. This isn't like the beginning of it. It started a year or so ago, maybe even longer than that. We can pull up some larger time frames. Just the way that the momentum has started shifting in the market has given an indication that we would start to see greater swings and more volatile swings in the market. We talked about this last year, and it's just become more apparent, as things get closer and closer. So we also think of trading and different strategies a lot like weather forecasters. You have a high probability of things starting to develop that could lead into, for example, a hurricane. Your tropical depressions, you've got the right time of the year. They could build into a hurricane, hit the East Coast, head into Mexico. You don't know as it's actually out there in the ocean forming and developing. You know that the circumstances are right for it to happen, but as it's that far out, you don't know as many of the details. And that's very similar to the way new trends begin in the market. You can start to predict when a trend is exhausted and there becomes a higher probability of a reversal or zone of congestion beginning to develop or build. But you have to watch it as it gets closer and closer and momentum begins to shift. And you start to see more of these nuances that you study come into play. So when we look at a fixed mindset, and you're thinking in terms of like weather forecasting as an example, then you might say, hey, this is where XYZ tropical depression was last year, and here's where it hit. So this new one's going to hit at the same place. It doesn't make sense, does it? Every little thing can impact it. I look at, in my system of market analysis, I look at what I call 5 building blocks of price development. So those are the things like the trend placement, and you can spend years studying trend development alone. Time development, again, we're going to talk about this here, which time development and trend development, they go hand in hand. So does momentum. All of these work together and play off of each other. They're the things that shift the market. And studying them and how they work together is a great way to then begin to understand every single pattern in the market. So not just bull flags or bear flags, but how do bull flags turn into reversal strategies? And in what circumstances are we really going to see a continuation versus what circumstances is this going to go into more of a congestion or even a reversal at that point? So let's go on here and let's look at some examples of growth mindset trading and really growth mindset period. So you want to learn new things. And what's really important is that you're willing to seek out those that have more experience than you do to help you succeed. The problem here for a lot of traders is knowing who you can go to, because the internet and expos and everything are flooded with different styles of trading, different promises that these gurus are making for you. But how do you understand, which one of them is really legit or not? And let me tell you, there are some technical analysts out there, they can't trade because they can't get over the psychology of it, but they are excellent analysts. And if you follow their market analysis, but keep your risk and return tight where you're doing the executions and dealing with the emotional aspects, you could totally trade successfully following their system. But they have a hard time themselves applying it because of the emotional issues that or the psychology that they're dealing with. So there's different mindsets out there, even when it comes to educators and teachers. When I started trading, there really wasn't much available. This was the mid 1990s, the internet was still pretty new, let alone trying to learn technical analysis when most traders were still on the floor or just coming off of the floor at that time. And they didn't really use technical analysis to the degree that we do these days. So it was often considered kind of hooky and not really like a legit system of analysis. Now, growing up as an artist and studying anthropology and archaeology and psychology of how people act and react, it made total sense, because if you're looking at charts of the market, you're really just trading human emotions. And we've spent a lot of the last couple of years where we've looked at even just the chart development on COVID infections and how those can help you predict upcoming waves and slowdowns. And of course, there's logical aspects of it. Hey, it's going into winter, but you can still see on the charts the development of these as they come up. With the last wave before Omicron went full scale, I posted, if this was a security, I'd be buying it here. Not really something you want to hear with regard to something like COVID, but the charts looked exactly like buy setups would in individual securities. And it doesn't matter what security you're looking at, because the patterns are all repetitive. So if you're trading gold, you're going to see the same types of price development and patterns as you would if you were trading like Forex or say like the Aussie dollar or Bitcoin. And it's just understanding how different things like trend placement can impact the development of a trade. So another thing with trading and the growth mindset is that you've got to be willing to take risks, because that's what you need to do in order to learn and grow from them. You can't be stuck sim trading forever, but at the same time, you don't want to go in and try some insane stunt and pretend you're Evel Knievel without any sort of practice or prior knowledge of things before you go and decide to jump off the Grand Canyon or whatever. But we need to still be able to take risks. So in the market, what this can translate as is that after you've worked on a system and tried it out in the overall market, don't just go full steam into trading live. Instead, say, hey, I'm going to start with just this particular strategy. I'm going to look at only trading this strategy with minimum shares or contracts that I need according to how I've studied the strategy. In the futures market, for example, with my system, you tend to need 3 contracts. So if you're looking at trading like the micros, which is great, you guys, when I started trading futures, we didn't have micro contracts. So, and now you have them even on oil. They just started trading micro oil contracts within the last year. So you can go into those without substantial risk. But you still have to be willing to take them and willing to step back, where after each trade, you go back and you analyze your trade. Many traders, in fact, like the vast majority of them that I've come across, never bother to actually journal their trades. They don't bother to go back and look at, hey, what did I do correctly? What can I still work on? How does this trade compare to other trades that are the same strategy that I've taken in the past? What are the differences? What are the similarities? Every single trader needs to put in the time to do that. It's very easy when you have a horrible day or a horrible week to say, you know what, I'm just not going to. It's too much. It's too overwhelming. I can't do this. But if you take the time to actually go back and do that, then you'll start to see patterns in your trading leading up to the disaster. You will start to see, hey, you know what? When I came into this day, I took 3 stops in a row. And even though I was right in the direction throughout the afternoon, I didn't trade the system properly. I was too aggressive. I was buying or shorting at completely the wrong spot. I wasn't holding long enough. I was trading with a third of the contracts that I did on those 3 stops I took first of all. So studying patterns like that in your trading, you can say, hey, you know what? After I have 3 losses in a row, I'm just going to go to sim trading and just focus on that until I can get to a point where when I take 3 losses in a row, emotionally, I can push myself back into trading the strategies properly again. And just repeating that and having rules like that are going to help you progress. Sure, it stinks if like once you get to a point where the rest of the trades in the day are do really well, but they're all sim trades. But you took that step to develop emotionally to overcoming those losses. And that is really, really important. So if we look at growth mindset questions for traders, here's some of the things that we can think about. And they might seem like a little bit abstract to begin with, and you might not have a reason or an answer to the questions. So like, why did that rally happen? As a new trader, you might be like, there were stronger buyers than sellers. I mean, that's not going to teach you anything in terms of recognizing the start of a rally. That's just like, okay, duh. But if you start to break it down to what price action happened before the rally started, that pushes that question further. What was the momentum like before that rally started? Why is this market so choppy? Okay, that's a great starting point. But it's like, why did the rally happen? We have to expand on these. We're not looking at like feel good answers like or just like simple one word, one sentence responses. We're looking to actually analyze what type of price action happened before the rally occurred. What differentiated the current rally to the previous week? And what you're going to find is that there's a series of specific patterns that link together, one into the next, that happen over and over again at market highs and lows, whether it is on a 30-second chart or a 30-minute chart or a 30-day chart. The same types of action happen repetitively. There's not just like 3 ways that they can unfold. There's a few dozen ways that they can unfold, but they can all be broken down using the building blocks of price development, looking at things like wave count and time development and how the volume plays out. So that when you look at each of those individual aspects of the reversal, you'll start to see the patterns that are forming. And not only will you start to see the patterns, but you'll start to have confidence in those patterns by seeing them over and over again. So that comes down to, that last question. How could I have seen it ahead of time? Well, cover up the market from the point in which it takes off and look at everything that happened before. look at the differences in how that particular strategy formed compared to another one. And your ideas might be very simple to start with. You could say, hey, for example, this current bull flag took 3 times longer than the rally to develop before it took off again. So maybe it rallied for 30 minutes and it went into a base for 90 minutes and then it took off again. That's probably going to be where you would have like an inverse head and shoulders within that base. But just looking at simple things like that to begin with, and then building out from that point. And we will look at specific examples here before I'm done for the day. So like I said earlier, recognize there's not an end goal or a finish line. Sure, you might get to the point where you're not journaling as much as you used to, and you feel like, I kind of already know this already. But if you take the time to actually still go out and look at your trades, you will continue to learn new things. It might be that, hey, you learn new strategies, like, hey, you can learn like a reversal strategy at the end of a trend that precipitates an avalanche or a phoenix. So, you have like your trends move up here. The avalanche is basically, it looks like a bear flag, but it's the first correction in a new downtrend. So you'll start to recognize things that are happening over here that increase the probability of this avalanche happening in the first place. Next, I think a really difficult thing for a lot of traders is to define your starting point. Where are you going to begin? You might feel completely overwhelmed. You might have tried a million systems already, or what already felt like a million systems. But if you pick one or two core strategies that stand out to you, maybe you've seen them a few times as they've actually unfolded and you were able to, say, hey, this is a bull flag or whatever. And you devote yourself to just focusing upon those strategies inside and out. So maybe it's a head and shoulders and inverse head and shoulders. Maybe that's your starting point. The great thing about that is you're going to learn the reversal patterns that happen before the right shoulder forms. Head and shoulders, for those of you that are new traders, is just a market that looks like this. You've got an upswing over here, you'll get a correction, you get a swing to a higher high, swing back down, generally into this zone of support, forms a base over here. Like I said, looks like a bear flag. We call this an avalanche, but it's also the shoulder of a head and shoulders formation. So if we're only studying the head and shoulders pattern to begin with, what we would do is we would look to break down that pattern. Look at, hey, where is this taking place in the larger trend? And for that, you do need, a basic understanding of how trends develop. So you might say, hey, you know what, before I even start trading particular strategies, I'm going to study those building blocks of price development that Toni talks about. And they are used in every single strategy. So we would be looking at trend exhaustion over here. We would be looking at the momentum, the resistance levels that are coming into play. So you might have like your fib fan channel happening in here. You could have, this might be retesting a previous high from the past. And you're looking at things like your wave count. In that move to that higher high, we often want to see 2 waves. If you're looking at a core textbook head and shoulders, you would actually get 2 waves of correction, 2 waves up, 2 waves of correction, and 2 waves in the base if you're looking at a really core setup for a head and shoulders. Then we would look at things like time development. how long does this right shoulder take to form before it continues on the downside? And there's a number of ways that we can look at time development and analyze that compared to the previous head and shoulders patterns that we've traded. We can look at it as the distance between the lows and the neckline. This is the neckline here, connecting this low to this low. So you can look at this to how long the right shoulder forms. Your right shoulder is over here. You can look at how long does that right shoulder take to form compared to the left shoulder. In a course setup, they're going to be about the same. We can also look at time development as how long does it take between the peaks of the head and shoulders patterns. As I drew it here, this is a good example of almost textbook time development. We have fairly comparable distance between where the length of between the two legs or between the two shoulders happens compared to the right shoulder over here where it breaks down, maybe a little bit shorter over there. We have very comparable time corrections within each of the shoulder before you get that next impulse move or burst of momentum happening. We have very comparable distance between those highs. So when you're going in and you're starting to trade a particular strategy, you want to develop a checklist. Say, hey, when I studied this strategy in the past, these are the traits that it had in common with other successful examples of that strategy. If this happens, like let's say, for example, this goes and it tries to break down here, and you don't have the time development that has been as common in previous examples of head and shoulders. Because if you look up head and shoulders on Google, you're not going to see discussions on time development. Well, you might if you've come across somebody that studied my system, but last time I taught it, I went back to see what it was out there. They don't talk about time development. So it's something that you can take from an educator who also happens to be a trader like me, where you can then go and apply that knowledge yourself, but you want to double check it. Hey, is this something that only happens or I can only identify in hindsight? How can I actually see it as it's developing real time? A legit trader or analyst is going to be able to show you examples where they've discussed it in real time. I do that every single day for an hour. We're always looking at the markets. I might be talking about a specific aspect of trading throughout that week, but you're going to see the analysis real time and the reasons why. Not just, hey, this is a level of resistance, let's short this. I'll go over all of those building blocks as to why it would be a short here. So another aspect of time development with our head and shoulders here is if we look at the shoulder over here and we say, how does that right shoulder unfold compared to previous action? So what we would normally see is that we would have that two-wave correction, like I said, and you'll be able to look at spacing between, again, those lows and where the breakdown happens over here. And when those are comparable, your odds of a successful breakdown are much higher. So you can combine all of those aspects of time development to have that alone be something that you're studying in every strategy that you want to take. Say you're only going to focus on the time development. What's the time development between a strategy that is successful versus one that isn't? Does it mean it's always going to fail if it breaks down at that halfway point? No. You could have tilted shoulders. And this is where studying one pattern and then focusing upon that pattern until you know it inside out is going to help you then learn all of the variations of that strategy. So we would call this a tilted check mark because it has like the V part, and then it has the base part, but the base part is lower over here. It could also go into a megaphone. It can go have that initial pop, pull back, come back up again, and then go. So it could have a lower low here, higher high here, create a megaphone for the right channel. But starting with that core basic template, you have the ability to then say, hey, let's look at examples that are specifically the megaphone, where the shoulder forms as a megaphone. And then you can look at all of the building blocks within that. Yes, it takes time, you guys, but you're looking to learn to specialize in trading a strategy, not just learning the basics of that strategy. Because how many times do you come across a textbook perfect setup compared to variations of that setup? Not often. So once you understand the basics, then you can start drilling down and looking at those core aspects and how they change. And that brings us to being realistic. You've got to be realistic. You can't sit down at a piano one day and expect to be performing at Carnegie Hall in 6 months. It's not going to happen. Maybe in 10 years, but not in 6 months. 10 years might even be a little unrealistic. I don't know. I dropped out of piano at about year 2, but I could play row, row, row your boat pretty good. I could do that one really excellent. But when you want to get into, playing Mozart, it's more difficult. And as a trader, that is where we get to after a few dozen years. But you don't have to be Mozart in order to be able to make consistent returns in your trading. You just have to be able to play more than hopscotch buns. So you need to move past that level. But you can just be a mediocre trader and analyst and still pound out a pretty good living at it. And the more you practice, the more you trade, the better you're going to do. Let's talk about goals and what it takes to reach a goal. So I never set goals that are monetary. A lot of people do, and that's what helps them. But for me, that gets in the way. I like to set goals of, hey, did I trade my strategy correctly in real time? Or to start with, hey, did I trade it correctly in sim? Those are my goals. And adding to the contract size or the share size over time. Another goal might be, hey, you know what? I've traded this pattern over and over again. I'm doing pretty decently at it, but I've noticed that a lot of times where I take partials, there's other opportunities to get back in that can lead to another move. So I might say, you know what, my next goal is, since I've been trading my exits at pretty decent levels and I'm pretty confident in my trade management on my system so far, I'm going to work on not taking out that first partial at the resistance level and holding more for a larger target. Or I'm going to say, I'm going to focus on adding into this position. So you can have short-term goals, or I'm going to focus on, hey, how can I tighten the stop and stay with the trend without getting flushed out and the trend still continuing? That can be a question, but you're always asking different questions that guide those goals. It's not, oh my gosh, I made $500 this week, I want to make 1,000 next week. Sure, your ultimate goal is to make more every year than you did the previous year, but that's not what I'm focusing on. I'm focusing on trading the strategies better, because the second portion with the money, that's going to come just by trading properly. So one of the things that often surprises traders is I don't watch my P&L throughout the day. I have it hidden. I don't have it on any of my charts, and it's not something that I focus on. I will go and check a couple of times, throughout the day, make sure I don't have like a position on or something that is, maybe got lost or something, because that's happened before. But I'm not going to be focused upon what my overall gain or loss is on the day. I might be focused on, say, hey, if I take so many losses in a row, I'm going to stop trading for the day. And I'm going to focus on taking setups where I have approximately the same monetary win or loss, especially loss on each trade. So my trades might average, let's say you want to put a risk limit of close to about $200. With stocks, you can do that a lot more easily. You can adjust your share size so that every single trade going into it, you're not risking more than $200. With futures, it's a little bit trickier because you need to be trading at least those 3 contracts. So as market volatility increases, you might find that you need to drop down to smaller time frames to take strategies based upon the smaller time frames than you would normally, in order to keep your risk levels the same. And you might find out, what, this market is too volatile for me to take the contracts that I need to do to trade my system properly. So I'm going to sim trade it instead until I can build up my contract size and my confidence. So visualization, I know the time goes fast, doesn't it, right? So visualization, look through how does your first recital as a trader go? What are you going to have to do to get there? Let's say your first recital is you want to take a bull flag in real time. So what's your checklist of what should be happening in that bull flag formation before you would take it? And have that checklist so that you can actually go through it one by one. And then over time, you'll also add, hey, what things are happening that mean I really shouldn't take the trade? With a lot of situations, like for example, that head and shoulders, it might be, well, the right shoulder went too long. It based out too long to support a good breakdown. Of course, execute your plan, study your strategies, trade your strategies, study your strategy trades, identify strengths and weaknesses, and tweak your strategies. Draw attention to pros and cons regarding your executions, your target levels, your stops, basically everything you can think of. Get input from other traders. Say, hey, you know what? I stopped out of this trade, but I don't know, Toni, why it stopped out. And a lot of traders will get to a point where they're like, oh, I just don't know, or it's subjective. This strategy works 80% of the time and 20% of the time it doesn't. A growth mindset trader wants to know the 20% of the time it doesn't. Why does that happen? What are the clues that you can look for that the odds are greater that it could be in that 20%? And the ones that are successful, the 80%, how successful are they? What makes one, like 5% of the trades go and quadruple the price or your gains? Which ones are still successful, but they only made 1-to-1 compared to what you're risking? How are those different? You're not just looking at, well, it didn't work, moving on. I always want to know why it didn't work. And if you talk to professional athletes, their coaches are going to be drilling down like that. They're not just going to say, oh, good performance, I'll see you next week. Great job we're done. No, they'll look at little things that they can tweak. And of course, repeat. So sim trading and trading journals are both 100% necessary. What does a good journal look like? Well, one of the ways that we can do this is we can create a Slack channel for yourself where you can divide it down into different strategies that are working, strategies that aren't working. That's one of the things that we've been doing in League of Traders, where we look at different strategies. Traders will post their charts. We can go back and analyze them and look at the pros and cons. We can look at, this is focusing upon target levels that we were at on a trade. And you can go back and review and study very easily. So you're going to post your entries, your exits, your target levels, your stop points, and move on from there. So start with a core template of the strategies you want to look at, a visual representation like that head and shoulders that I drew for you. And you're going to start to get variations of those strategies. So, hey, sometimes it looks like this, sometimes it looks like this. It's still a head and shoulders, but this is a different variation to how it unfolds. So I don't have a ton of time to get into a trading journal here today, but I do have an ebook that details it in great detail. It goes over the 5 building blocks that I talked about here today. It looks at how those work into different strategies. It talks about discipline in your trading. It goes into how to improve your discipline. It goes into many aspects of trading that I still do today. And this book was originally, I think it came out in 2009, but I updated it about a year ago, just adding more to it, just basic things because of like the different markets that changed since then. You know, like you'll have, for example, there weren't micro futures contracts a couple of years ago. So just updating it with things like that. But this is one of the first things that I would suggest. It's a very price conscious way that you can go and dive into the psychology of trading, but not just focus on psychology, but look at, hey, these are actual things that I can study in my journal. It shows examples of journal entries and how to set them up. This was a winner, silver medal winner of the Axiom Business Book Awards. It was a gold winner for a couple of other ones as well over the years, but it's really withstood the test of time. So we talk about, you know, how to lay the foundation for the development of a trading system, building confidence, uncovering weakness and strengths, and of course, those building blocks. So you can really dive into some pretty intense analysis of your trades. And it goes through, hey, where's the easy starting point? What's sustainable? You know, if you're spending so much time just analyzing a trade that you feel burnt out, how do you think you're going to progress? Do you think you're going to be able to keep analyzing and doing journals like that forever? Probably not. So you can start very simply saying, hey, you know what? I'm only going to look at momentum on this strategy for this week. And that's what I'm going to be focusing upon when I go back and look at the trades that I've taken. Every trade shows your entry, your exits, your stops, and your targets on a chart, multiple time frame charts. But from that point, you could say, you know what? This month, I'm looking at all of the head and shoulders and the time development aspects of that head and shoulders pattern. And that's what I'm going to be studying in my journal. So if you do a Slack channel, you can go and add notes to each chart that you posted. And you can title that note trend development and look at every single head and shoulders pattern in regards to how the trend development is unfolding. So that is one of them that I want to show with you. I also wanted to share with you the time development in the Russell here today, because this is one that we were talking about live a couple of days ago. It was as it was unfolding. And as I mentioned at the beginning of my presentation, that's what kicked off our current market rally on the Russell. So what I did a couple days ago was I grabbed that chart. I don't know if it was a 4,000 tick or not, but we were looking at the major pullback here. This was a big channel break in the overall market. We were coming into the support from where that channel had broken. And we had two lows where one low was just slightly under the previous one. It pulled back all the way to that zone of resistance and then retested the zone of lows here. So it put in a higher low. And we were able to follow this live as it was unfolding that day. And we added our Fibonacci time extension. So this is just a really quick, you can visualize it in your head as well. You know, hey, the spacing between here and here looks about the same. So it's more likely to be forming a shoulder versus a continuation on the downside. But you could also look at time development in terms of where the highs happened. And you'll see that I've got a 50% and a 61.8% time extension. Well, in a good head and shoulders, guess what? Your main pivot is going to be before the 61.8%. You're also going to have a slower overall momentum move than compared to here. So is this one perfect? No, because you've got a second pivot over here that's about the same as that first pivot. But it's just another aspect of time development that you can look at. So not just distancing between lows, not just distancing here where it breaks, but also looking at where the pivot points are happening within that shoulder can help give you greater odds. So this is the one that we're still in play. You know, we've still got in play here, but just understanding time development, we were able to look at the potential for that inverse head and shoulders to happen. If you want to dive into my system of market analysis even more, I also have a course that I did live. It was for 3.5 hours, but it is now available on demand. And it goes into the building blocks of price development, how to build those building blocks to create and test your own strategies, detailed specifics of one of my favorite strategies. So it looks at the building blocks within the context of that strategy that I trade pretty much day in and day out. And it also deals with more of the ways that you can overcome emotional trading obstacles, techniques that you can apply if you find that you're seeing the strategies, but you just don't have the confidence to take them, or you're trading them incorrectly, even though it's going against what your textbook example or template looks like. So this is a great way to further expand upon that. Usually most courses like this, you know, they're going to cost you somewhere like $995 or something like that. I've seen some of them that are thousands. Great thing about the education you guys get from me though, you guys, is that I make my living trading. So every single dime of income that comes into my website here goes towards my staff and paying to keep the website running. So my staff loves it when we sell more because it means that they make more. So
hey, Toni.
Yes.
Sorry, I gotta cut you off.
Yeah, go ahead. So anyways, you guys, thank you for having me here. David, thank you for having me here.